What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we did see a rally across the board and some of the sectors are starting to reverse the bear trend. With it looking like the counter trend rally could be well underway, we need to start looking at upside resistance for possibilities of bears showing up and getting that reversal. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. So today in SPY, we were up 2% on the dot and we did close back over our 20 simple moving average and we did get a very bullish development today. 2 days breaking back over our resistance trend line and closing above the negatively sloping 20 simple moving average. So remember, we're labeling this as a counter trend rally in a bear market, which means you should not be getting overly bullish until we get a higher low after we put in a higher high. So the bulls have completed step one, which is getting that bullish breakout, but we need to put a higher high in on the daily chart, which means we need SPY closing back above about 409. Above 409 will be a higher high and we'll likely get to at least 410 in the event we get that breakout, and then we could start to get a pullback, but it is possible we continue higher to either 420 or 430. Remember, this is a bear market and this is a downtrend, so the bears will not just roll over and die easily. They will not go down without a fight. So do not get overly bullish as we get to bouncing from here. You're looking for reversal at any of this upside resistance. And then if we're getting bullish, we should put in a higher low, meaning we don't come down here and take out the previous lows right around 388. And then we should break back out and make another daily higher high. And then we could say the chart has a higher high and a higher low. And then we will start seeing a lot more bullish development. So in the short term, while this is definitely bullish price action, we cannot say the bear trend is completely over and that we're in the clear and there's no longer a bear market that we need to be concerned about. So I hope that's perfectly clear that you still need to be very cautious, and while we do still have a downtrend, the bears are definitely losing a lot of momentum, and that is why you're seeing a lot of the selling pressure going away, because the bears are waiting at upside resistance. They're waiting for the bulls to get overly confident, and the bears are resting while we're waiting to get to strong resistance. So you can take this as an opportunity to start developing a trade plan around the next possible scenarios. So the bearish scenario will be that we get rejected from one of these lower highs and then go all the way down to the next leg lower, which is still down here at 376 and 370. And I still want you to use this level at 393 as a very critical pivot. As long as SPY is above 393, you need to be expecting more upside. And then below 393, it is likely we're getting that next leg lower. If you're sitting there thinking, why am I using 393 as the pivot? We're all the way up here at 405. Then you completely ignored the last 3 days of price action. And that is completely up to you to figure out now. The whole point of knowing 393 was your risk level is so that you could be adding on risk over the last 3 days. And now it's time to let those positions run and then manage your positions accordingly. One of the levels I would pay attention to is going to be right around here at this 20 simple moving average, which is right around 402.7. And it is a negative slope, so it will drop a little bit going into tomorrow's trading. If tomorrow's trading we close back over the 20 simple moving average for the second day in a row, that will be even more confirmation that the bulls are gaining momentum and starting to reverse this downtrend. The bears don't want the bulls to hang around too long, so the longer you see the bulls hanging around above some of this support and building a base of foundation, the bears will become weaker just because the bulls are becoming stronger. Remember, this is a market of buyers and sellers, and if we start to see the buyers overtaking the sellers, we will see higher prices. And it could get very impulsive because we have been selling off for quite a while and we did go through a buyer strike. So in the event we start to get bullish breakouts above resistances, there will be the possibility of short squeezing and FOMO as cash jumps in off of the sidelines and sends the stock market higher. So make sure you have a very clear trading plan no matter what happens from here, because it could get very impulsive to the upside, or we could see a very sharp reversal and get a very strong impulse to the downside. So know these very critical levels and make sure you understand how you're trading above or below them. On the NASDAQ 100 triple Qs, we were up 2.77% and we did not close above the 20 simple moving average, but we did come right up to the resistance trend line, which is right around 299. So the next bullish breakout on the triple Qs will be a close above 302 and then 306. And above 306, the bulls will likely run all the way up there to 318 or 330. Remember, the bears will be waiting at those levels and the bears will not just roll over without a fight. So you still need to be expecting plenty of resistance at those levels from the bears trying to short and trying to send the market lower. On the triple Qs, if we break back down below about 294 to 293, it's possible we retest the low right around 285. And if we break below 285, the next leg lower is at 276.8. and 269.5. So know this very critical breakout level right around 302 to 306 because that is going to decide whether or not the triple Qs come up here to retest resistance at 318. In the Dow Jones, we did gap up and run today, so the gap doesn't fill until we get back down to about 322. And we also did close back over our 20 simple moving average. However, the bears did show up at resistance right around 326. And that is exactly what we should be expecting to see. So the bulls now need to either gap over this resistance so they don't have to deal with it, or get another decisive close back over the 20 simple moving average. If the bulls in the Dow Jones can get another close above the 20 simple, we will see the bear trend reversing, which will give the bulls and the buyers more confidence. On a break above 326, the next very strong resistance will be right around 333. And above 333, the bulls are gaining momentum, even though there will be a lot of bears waiting up here at 340. So those are your three very critical resistance levels you need to pay attention to. And the bears will be getting a lot weaker if we start getting closes over the 50 EMA, because we'll lose the bear trend and we'll start getting some bullish price action confirmation. So going into tomorrow, it will be a bullish close as long as we close above 323. So that should be the very critical support level you're paying attention to. Below 323, we could come all the way back down to retest the lows right around 312. And if we break below that, you still have the support at 310 and 308. On the Russell 2000 IWM ETF, we were up 2.23% and we did close just below resistance at 183. So we did fail to break out and form a new daily high, but we are getting very close to doing so. One more day of the bulls closing above the 20 simple moving average should reverse the bear trend. So the bears are losing momentum, which is a bullish indication. So going into tomorrow's session, if IWM can close above 180, that will be a very bullish development, and it'll be even more bullish if we can close above 183, and that'll very likely take us back up to retest resistance in the 190s, and above 191.5 will be a bullish breakout. Now, if we do break back down below 180, you're looking for a retest of support right around 175, and below 175, you're looking for a retest of the low at 170 or the gap close at 165.7. On the ARKK ETF, we were up 3.9%, and ARKK came all the way back up to the 13 EMA, but we still do have a bear trend, and we are still trading below the negatively sloping 20 simple moving average, and this is still a very strong bear market. On ARKK, you're looking for a bullish breakout above 44, and that should take us back up to retest resistance at 47, and then above 47, you're looking for a retest of 52, and it's not until we start closing above 52 that the bear market will likely be over. So this is a downtrend until it's not, and it's a very strong bear market, and there's still a real possibility we come down to the price target at 33.7 if we continue to lose this support zone around 40. On the VIX, we were down 3.14%, and the VIX does continue to get crushed, and the VIX is looking weaker and weaker, continuing to put in lower highs, but we still do have higher lows. So the next bullish development in the VIX will be closing below 25 and then closing below 24. Get a lot more cautious if we see the VIX spiking above 30 because that could push us down for the next leg lower. On Bitcoin, we're currently flat on the day, trading around 29,500, and we continue to bounce off of this support zone at 28,000, which I continue to tell you is signs that there's buyers at that level. It is very likely the longer this support level holds up, that the more confident the bulls will get, so I am looking for a very impulsive bull rally off of this support to take us back up to 37,000. Above 37,000, we're looking for the bullish breakout above 40,000, and then we'll likely reverse the bear market, and we could see a nice little bull rally in Bitcoin. However, if we lose support at 28,000, you're looking for a retest of this low at 25,000, and below 25,000, it's still possible we come down to support at 20,000. I do think support at 28,000 will hold up, but the stock market doesn't care what I think, so watch that level very closely. On NVDA stock, we were up 5.16% today, and we did have earnings after the bell yesterday, so this is definitely some bullish price action, and we did get a bullish close above the 20 simple moving average. However, we failed to close above resistance at 179. So going into tomorrow, you're looking for a bullish follow through with today's price action, closing back over 177 or breaking resistance at 179. Remember, the bulls are going against a very strong downtrend, so when you see a very bullish candle like this, that is a bullish development, because that means there was little selling and a lot of buying. The next bullish breakout will be a close above 199, and then we should be back on the bull by the time we close above 210. If we fail to hold this support zone right around 171, you're looking for that downside price target, which is still valid down here at 150 as long as we have the bear trend. On Tesla, we were up 7.43%, and Tesla did get a very strong bounce off of our support level down there at 620, and we did close back over the 5 EMA, and we closed over resistance at 700. The next resistance level to conquer will be up here at 762 and then 828. And if we get back over $900, we will be getting bullish on Tesla. If we fail to hold support at 620, look for a test of the next leg lower at 570. On Apple stock, we were up 2.32%, and Apple did get that bullish close above 143, and we did hold that support zone at 137. The next bullish breakout from here will be a close above 150, and we should be back on the bull by the time we close above 156. If we fail to hold support at 143, look for a retest of 137, 134, or the price target at 130. On the financial sector, we did gap up and close up 2.31% higher, and we did snap the bear trend, so this is an extremely bullish development with the financial sector showing some bullish momentum because the financial sector is one of the heaviest weighted sectors in the S&P 500. Look for the next bullish test to be a breakout above the 50 EMA, and the bulls do look like they are gaining momentum in the financials. On the industrial sector, we were up just over 2%, and we did close over the 20 simple moving average, so we're very close to reversing the bear trend, and we are starting to see some bullish price action. This is another very bullish signal for the S&P 500 as a whole. On the healthcare sector, we were up 0.43%, and we continue to close above 3 of our 4 moving averages, so the bulls just need to break out above our resistance trend line, and we should start to develop a bull trend. Again, this is another bullish development for the S&P 500 to see these sectors reversing the downtrends and starting to show some bullish price action. The energy sector was up just over 1% today, and we continue to close at 52-week highs, and we continue to have a strong bull trend, but there could be signs that the buyers are getting exhausted as we continue to go up on very low volume. So do be very cautious that even though we could get up there to $90, we could be due for a correction in the energy sector in the very near future. So watch support as the 20 simple moving average to let you know that we're breaking down if we close below that. So jumping back over to the S&P 500, this is definitely signs across the board that we are starting to see some bullish developments with some of the sectors breaking their downtrends and starting to get some bullish closes above the 20 simple moving average. Remember, this is still a downtrend until it's not, but everything happens day by day, and right now we are starting to see some signs that the bulls are still out there and they're starting to buy. That doesn't mean we're out of the bear market. All bear markets have very strong counter trend rallies, so you still need to be very cautious and respect the very strong resistance levels that I give you on a daily basis. Know which support levels are the most critical and make sure you have a trading plan that is helping you stay profitable no matter which direction the market goes from here. Use proper risk management and understand that volatility does work in both directions, so in this volatile market, we could still see a very strong impulsive bull rally. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank Trade Alerts beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of the video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord server, you can find out how to join by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.